In 1996, I dug through public records and I found a note that earned me a $2,000 broker fee. No capital required. Do you want to source notes like this in 2025? So let's break it down. Sourcing notes is where note investing begins, and public records can be your treasure map if you know how to read it. I'm TJ Fitzgerald with nearly 30 years in note investing. I started in 1996. This is week 2 of I believe, week 2. I'm losing track because we're kind of rolling along pretty fast here. It's my 52-week series, how to start note investing with $5,000 or less in 2025. So today we're going to be covering how to source notes via public records, whether you're a new person with no cash or a pro who's scaling up. So let's get to work. First, note brokering is the smartest way, I should say, for beginners to start. You find seller finance notes, mortgages where the seller acts as the lender, and refer them to professional funders for a fee. No money down, just effort. Now, back in 1997, when I was a rookie in Chicago, networking with real estate attorneys at a local meetup, one attorney mentioned a client who seller financed a $50,000 note on a duplex at 8% interest. So what I did is I hit the Cook County Recorder's office. I found the mortgage filing in the public records, and I contacted the seller. Now after verifying the note details, I brokered it to a small bank, community bank, for a $2,000 fee. Now that deal showed me public records aren't just paperwork, they're a pipeline to profits, actually, really. I mean, it's still true here in 2025. So purchased note holder lists from reputable sources like us, for example, at noteinvestors.com, are your best bet for efficiency. Now these lists, costing anywhere from a couple $100 or a little bit more than that, compile verified owners of seller finance notes with contact information. In 2025, interest rates are hovering at around 4.25 to 4.5%, I believe, as I record this, per the data from the Federal Reserve, pushing more sellers to finance deals themselves to compete with banks. Now, what this is doing is creating a flood of notes, really, virtually flood, really, comparatively speaking, from the past, right? Perfect for brokering, right? Lists are going to be saving you hours of time compared to sifting through the public records. I mean, inordinate amount of time saved. For example, a $1,000 list might include 100 note holders with 5 to 10 viable leads out of that stack. So you compare that to manually searching thousands of county filings, you do the math on that, and so lists are precise, they're reliable, and they're worth the investment in my experience, well worth it. So if you're starting with $5,000, for example, allocate $500 for a list and use the rest for marketing or due diligence, One of my threads on direct mail, I believe I'll link down below to it, I think, show to our site where I posted this information on direct mail, showed how targeted campaigns to note holders can amplify these lists. So public records are a solid fallback, especially if you're starting with a zero budget. All right. Most counties in 2025 have digitized their recorder's offices, so it makes searching a lot easier. If you visit county websites or offices, look for deed of trust or mortgage filings with terms like seller financed or owner financed. Industry reports note an 8% foreclosure increase in 2025, which means that more sellers are offering creative financing to move properties. For example, in Maricopa County, Arizona, I sourced a $30,000 note last year by filtering online records for seller finance deals. Now, I expect to pay $1 to $2 per page for copies, and some counties still require in-person visits. Be patient on that. Results vary by county. A lot of counties in the U.S. Start with high population areas like Miami-Dade or Harris County for more leads. So let's cover point 3. Due diligence is going to be your safety net. Whether from lists or public records, verify every note's details: loan balance, payment history, interest rate, and lien position. First position notes are safest for beginners. Second position notes are riskier and harder to sell. Use a title company or attorney to confirm clear title, and check property tax records for red flags. In 1997, I nearly brokered a note with hidden lien on there. Public records caught it, and that saved me a headache. not to mention some damage to my pocketbook. Okay, so for example, check the borrower's payment history for the past 12 months, pretty elementary, okay, and confirm the property tax status, okay. A missed tax payment can signal trouble. Now, I have a link down below, I believe, to one of my threads on the site at noteinvestors.com having to do with direct mail, describing how emphasized checking on foreclosure filings too, okay, as distressed properties often lead to seller finance notes. Skip non-performing notes as a beginner, they're a different beast. Okay, so let's get into point 4. Build a referral network to boost your sourcing. Attorneys, title companies, and small banks oftentimes know note holders. I have a link to a thread down below on referral networks, highlighting how a single attorney contact can lead to multiple deals. Now, in 2025, small banks facing tighter lending standards due to rising rates are more open to buying notes or referring sellers. Okay, attend local real estate meetups or engage on X, for example, with hashtags like note investing. One conversation could unlock a deal. For example, the title company contact last year tipped me off to a $40,000 note in Ohio. Follow up with a quick call or a coffee meeting to build trust. Now, creative strategies stretch your $5,000 budget. Okay, now brokering requires no capital, but you can also partner with experienced investors for joint ventures. You can split profits, on note purchases. Alternatively, buy small notes. Okay, $5,000 can cover a partial note or due diligence costs. For example, the $5,000 partial note might yield $500 monthly payments, which can create steady cash flow. Now, my upcoming Note Investing Formulas program, we're going to be launching soon, will teach you how to structure partnerships and find small notes. So start with first position notes to minimize risk. Now, risk mitigation is crucial. Avoid non-performing notes as a beginner. They're complex and illiquid. Always verify note terms and consult local regulations. Now, my mini course at noteinvestors.com includes templates for contacting note holders and scripts for brokering deals. Now, investing is a business. Treat it like one. Okay, results vary and there's no guarantee of success. You've got to work at it. Okay, are you ready to source notes in 2025? Join my mini course at noteinvestors.com for brokering templates and step-by-step guides. Watch for Note Investing Formulas, our program coming up soon. And subscribe, like, and drop your biggest sourcing question down below in the comments. And I'll see you next week for the next tip. See you later. Bye-bye.